บริษัท TPI โพลีนจำกัดมหาชนนะครับสำหรับผลประกอบการในปีที่ผ่านมานะฮะปี 2024 นะครับผู้บรรยายสรุปข้อมูลวันนี้นะครับคุณมาเรียเวนด้าซานเชสลาฟิสนะครับจะเป็น Vice President ทาง Corporate Relations ส่วนผมประเสริฐอิทธิเมคินนะครับเป็น SVP ทางด้าน Finance นะฮะคุณมาเรียจะเป็นผู้บรรยายสรุปข้อมูลตาม Presentation Material แล้วก็ร่วมตอบคำถามพร้อมกับผมด้วยครับคุณมาเรียนะครับ
Thank you. Good morning, everyone, and thank you for joining in this review for the 2024 performance. Our presentation will have 4 parts as usual: company background, performance in 2024, trends and outlook, as well as guidance, and then some bits on our sustainability. Just very quickly on our assets and capacities, the change from last time is on the power. Where is the mouse? It's on the power, whereby you can see our solar capacity is now at 61 megawatt, and it will be completed by June 2025. And then we also have 5 megawatt of solar roof capacity. Pointer. In 2024, we have these following initiatives: the green cement, green building products, innovative specialty polymer, bioorganic products for food safety and food security, green energy, green power. This is a combination of waste to energy and also solar farms, and then cost efficiency. These are, before that, the one in blue are actually continuation of the initiatives we had in 2023. The one in red are new projects coming in 2024. So in our initial sustainability products, we have green cement. In 2024, it accounted for about 70% of our construction materials sales. We also have innovative product, HVA. In the fiber board, we have a product that is actually patented in the US. I received the patent in mid of 2023, and this is a very good substitute to wood products. And it has a lot of attractive properties such as termite resistant, water resistant, fire retardant, and also very easy to use and implement. So we hope that this product will continue to grow in 2025. In third quarter of 2024, we introduced a new specialty film, which can be used as a substitute of the existing material that is used in glass windows, that is to prevent the entry of the sunlight. And this product can prevent or can protect infrared radiation by about 80%. And then we also have the food safety and food security products. We think that the outlook of this particular product group is quite positive, especially now that there's a big move towards sustainable agriculture, regenerative farming, and also high bioorganic food and safety chemicals. In 2024, sales of this particular division grew by 105%. On a QOQ in fourth quarter, it grew by about tenfold. So it looks good, but still very small relative to the total business of the group. This is our solar farm. It's in Saraburi, and the off-taker is the TPI POLENE cement production facility. It's a total of 61 megawatt capacity, and it will be it's complete now, and it will finally COD everything 100% by around middle of this year. We also convert roofs of our production facilities in all seasons, and in the fiber cement, it is now solar panels. So during daytime, we take electricity from the grid, and in the nighttime, if there is production, we take from the national grid. And we have also converted our distribution centers into solar roofs, and also augmenting the power consumption for the daytime. One of the bigger projects that we have been doing and has been completed is the alternative fuel replacement in our clinker. In our case, we use MSW, and on an installed capacity basis, we can replace 25% coal consumption in our clinker production facility. For this one, we use the German technology. We also have cost efficiency and savings. We are changing our logistics into EV, and then we also have installed EV charging stations. We are also changing our heavy equipment and machinery into EV, and it is already, for the heavy equipment, it's already been complete. For our logistics, it is ongoing. And overall, as of 2024, the diesel consumption has dropped by as much as 50%. So this is one of our cost savings and one of the good developments that we have. We are moving towards 100, that we can claim that we are a green company. So you will already have seen the 2024 performance. So this is just a quick review. The big picture first, to understand the backdrop, you can see that the biggest drawback for 2024 operation is the low capex spending of the government. This is this line, and it was very, very low up until like April, and started getting up and improved significantly in the around third quarter, which is the last quarter of the government fiscal budget. And it's the same thing for the state enterprises. They hardly had any capex going on in 2024 fiscal year. And this major background has affected the real sector, and you can see that investment in construction for the real sector also went down. And this is also even reflected in the financing space, where you can see lending to corporates actually very, very low growth and negative in some months. So this is the big picture for TPI POLENE's operating situation, slow in 2024. How about the manufacturing? Because we sell petrochemical or polymers, you can also see that based on the producers' manufacturing index, the index stayed well below the 50 dash line, which is at the sort of a tipping point between expansion and contraction. So major economies, US, Eurozone, and China had a very slow manufacturing activity. So it makes a lot of sense that petrochemical prices would also be weak. In addition to that, there were already shutdowns, and also there was disruption in the product flow due to the ongoing conflict, not only in Eastern Europe, but also Middle East and part of Europe, which is the Israeli war. So how did we do? In 2024, our sales dropped by 16% year on year. Our gross profit dropped by 21%. Operating profit dropped by 29%, and pre-tax profit dropped by 37%. These big drops is not unique. You can see our performance in terms of ratios replicating the other players in the construction material and the petrochemical space. Now, our gross on a common size basis, you could also see that the drop in gross profit was 21%. On a margin basis, the gross margin dropped from 23 to close to 22%, so about 100 basis points. But the drop in terms of margin is helped by cost savings. You can see in margin basis, our drop is not so much because we had cost savings. Now, this is the product group. This is just as an example on how the product divisions moved in 2024 as well as profitability. Please note that this gross profit here is before depreciation. And that's the margin also. And these numbers does not include the intersegment transactions. So this is really just an example or to show how the product moved from year to year. So you can see that cement sales, while the total sales dropped only 16%, in the case of cement, the drop was 20%. And in the case of specialty, the drop was 36%. And for the nitrate, 25%. The only one that has very low drop in sales was power, and that is largely because of the lower tariff and not related much to that performance itself. In terms of margin, actually the gross margin of cement, even though the sales dropped 20%, was because of increase to 19%, was because of the cost savings. And the gross margin of the specialty collapsed from 24% in 2023 to just 9% in 2024, whereas the margin for the nitrate was improved and for the concrete as well. So, but please remember that this margin is artificial because it does not include the depreciation. So how did we do on a quarter-quarter basis? Remember, I showed you the low capital expenditure by the government in the first and second quarter of last year. During the time, our sales actually dropped a lot. It dropped 20% in the first quarter and dropped 23% in the second quarter. And this cool down in sales was just largely due to construction material being weak and also specialty polymer seeing very significant drop in prices. I also showed to you that the fiscal capex started spending in the third quarter and fourth quarter of last year. And you can also see that in our performance. The drop in the sales in the third quarter was less than first and second quarter, dropping only 16%. And by the fourth quarter, the drop was lower by about 5%. And you can see that all throughout in the 2023, sales stayed within around the same range of 10 to close to 10 to 11 billion. So we are very clearly dependent on the capital expenditure activity of the government for now. Hopefully, with the normalization of everything, the capital spending will be regular in this particular year. This is how our EBITDA looks like. You would note that like many industries, the Tpipl business has very high degree of operating leverage. What does that mean? It means that for 1% drop in sales, the drop in profitability will be higher. However, you can see that in the first and the second quarter of last year, the drop of our EBITDA is actually much less than in our sales, as I showed to you before. And the reason for this is we had cost savings, and we had a lot of projects from last year that actually came in and helped reduce the costs. You would also remember that our profit margin was only down less than gross profit. But in the third quarter, you can see that the drop in the EBITDA was higher than the drop in sales. EBITDA dropped 56%. And the reason for this is because of the significant currency loss on our US dollar asset, and that is mostly in the construction material. In the fourth quarter, the EBITDA actually increased, whereas sales, if you recall, was still down 5%. And the reason for this is because we had a reversal in the foreign exchange the area, a reversal of 369. So you see the growth. If you strip this out, we still have a better EBITDA, but certainly not 7% improvement. So why was our third and fourth quarter weaker if we strip off the forex? The reason is that we had plant shutdowns in the third and fourth quarter. Operating rates were lower, and so the unit fixed cost is higher. Like everything is higher on a per unit basis. Because you cannot do that in the industrial. What was the shutdown for? For two things. One is maintenance, and the second one is capacity hookup. But our sales were not affected because we were drawing down from our existing inventory. So in terms of divisions, you can see that construction material is still the most important segment in terms of generation of sales. However, it is not the biggest contributor to our group EBITDA. And you can also see here that specialty polymer, which accounts for about 35% of our sales in 2022, 25% in 2023, and 20% in 2024. You can see that in terms of EBITDA contribution, the group EBITDA, the specialty and chemical division bring in 48% of the total group EBITDA, and this has come down to 26% and further down to 14% in the 2024. And this ratio of EBITDA generation compared to the total is almost back to the normal level. So in 2024, the specialty polymer has faded out in terms of true contribution to sales and EBITDA. The best performer for us last year was the power. The power division contributed 22% to our sales, but generated 54% of our EBITDA. And power's strong performance was because mainly of high operating rates, resulting in 7% increase in volume throughput, and also that is plant efficiency related, and also the lower unit fixed cost, plus a lot of benefits coming from the cost savings and fuel substitution programs that has been going on since 2022. So unlike our bigger competitors in construction and petrochemical, TPI POLENE Group doesn't have assets overseas. Most of our operations are in Thailand. So this is just to say that should everything come back to normal here in Thailand, TPI POLENE, among others, would be the one that is possible to show significant improvement in terms of performance, because it's very Thailand-centric. That said, we have footprints, overseas footprints through our export activities. And you can see here that in terms of sales, Thailand dropped 4% on a group basis, relative to other countries. China dropped 59%, and that is totally polymer related. And Bangladesh market dropped 88%. That is because we did not send clinker products to Bangladesh last year. The price was very unattractive, and we didn't see the point of joining in the price dumping situation. What are growing for us are the markets of Australia, up 8% last year. The market in India, up 22%, and in Philippines, up 9%. The strong growth in India was partly because when the petrochemical spread, the polymer spread in China looked very unattractive, we switched to the India market and sell LDPE instead of EVA. And this is the reason why India market had a high growth last year for us. Leverage remains manageable. Yes, gross debt is quite high, actually a bit lower than last year, but it is manageable at this point in time. In terms of net debt position, we are at 71 billion. But you would notice that at the end of 2024, our cash balance dropped to about 10 billion. We use some of the cash to repay our short-term loans, which is mostly bills of exchange. In terms of interest debt servicing capability, our net debt to EBITDA rose to 8 times from 6.4 in 2023, but our net debt to equity is still 1.1 times. So we just finished our credit rating review, and we managed to keep our rating at A- from last time, but the outlook has been downgraded to negative, whereas for TPI POLENE Power, credit rating was A- and standalone is A. So let's go for trends, and very quickly, because I think a lot of people already kind of know what this is going to be. Now, we are in the middle of this decade, 2025, right? So we go and look back how was TPI POLENE Group during the last decade. And you can see that from the 2010 to 2022, this is the base year and the peak, our sales grew by about 105% during the period. But in terms of profitability, EBITDA generation, you can see that from our base period of 2010 to the peak, we posted a growth of 250%. And that is quite exceptional. And that is because of a series of CapEx designed to improve plant efficiency, substitution from coal to MSW, as well as a lot of cost savings measures that are actually related to ESG and sustainability. So this is another way to look at our performance capability and the ability to generate EBITDA. At the end of last year, our EBITDA margin with FX was 28%. But take a look from 2010 down the 15-year history of the company, the average long-term EBITDA margin was 17.8%. But during the low cycle of 2012 to 2017, our average EBITDA margin was only around 11%. Where we pulled up our long-term average EBITDA margin was in the high cycle, whereby our average EBITDA margin was 25%. Now, this we can clearly say that we have broken out of the long-term, the low cycle average, and is hitting in a high average range. And on our forecast, we are looking to deliver EBITDA margin better than 26 to 30%. This is base case scenario. Let's talk a bit about specialty polymer. You can see this industry is classic boom and bust cycle because expansions are big and demand growth it doesn't jump significantly. So it takes a lot of time to absorb the new capacity. In this year of 2000 down until 2007, this was the last extended trough for the petrochemical cycle. And then it got better in the year of 2008 and down until 2012, right? And then it had a spike in 2021, 2022, and now collapsing again to the last trough of 2000s. Now, look at our specialty polymer margin. It follows exactly the same track. This is the extended trough, and the EBITDA we generated there was quite around 62 million baht, double around 100 million baht. And then it went very, very low over a period of time, and then spiked in here in the period of 2021 to 2022, exactly replicating the trend on the spread on the product spread, and it's coming down here. Now, I told you that specialty polymer, which was a big deal for us in terms of EBITDA generation in 2022, 2023, is no longer in the picture in terms of 2024 and is fading away. That is our base case scenario going forward. Now, we move on to the future-looking trends. We take a kind of comfort on the fact that the government spending has come back to normal. And these are the government agencies that have high component of construction activities in their budget. And you can see that because of the delay in the release, particularly for the case of provincial budget and the local administration, that the efficiency in spending was very, very low. For these agencies, the capex budget was 807 billion, 808 billion, but the actual spend was only 444, and that is 55% of the budget. Now, in the current fiscal year, the budget for these industries or for these government agencies were increased to 932. And if we assume that we are a normal year and we can, no hiccups, no problem with government agency and officer signing and so on, we could literally see a 253% increase in spending for the province, for example, and 268% increase in local administrative organization. And this will be the big driver for the recovery in the volume sales of the cement sector in Thailand. And this actually is seen in the capex spending also. You can see that since the beginning of the fiscal year, and this is the fourth quarter for us, the spending has increased by about 90% year-on-year basis. And you recall, right, that in the fourth quarter, our sales dropped only 5% year-on-year, and our EBITDA actually rose over 20%. So we are very hopeful that at least for the cement sector, the government spending will return to the normal year. This is the list, partial list of the new projects. There are actually a lot of ongoing projects, construction projects by the government, but I specifically put this here because these are the new projects, and these are the ones that are very intensive in terms of cement utilization. So we are looking for expansion in the what do you call that, mass transit. We are also looking for the continued implementation of that high-speed railway that will link Thailand eventually to China. And we are quite optimistic because the other part of the Thailand-China railway, which is Laos, is already complete and has been operating for 2 years. And so Thailand is the last leg. And according to the government, they expect the railway to start operation by 2030. Now, this is the amount of money that could be spent for that particular railway. But in regards to the construction material sector, we will also benefit from the development of real estate projects along the routes. So this is a classic multiplier effect in terms of infrastructure like this one. There was a lot of talk about the one-stop entertainment complex, but we do not count on that in the scenario yet because the law is not yet approved. However, based on early estimates, the budget for that is going to be 100 billion. And that is a huge amount of money for a complex. And for referencing, the one Bangkok cost 107 billion, whereas the Dusit Central Park was 46 billion. Now, in terms of global driver, you can see that growth is stable for 2025 and 2026, but it's kind of low for the world. The good news is that for ASEAN, the average is 4.6%. India is the fastest growing, which is at 6.5%, and Philippines and Vietnam will also be closer to that, around 6%. And the better news even is that the construction GDP for the ASEAN 6 is expected to grow close to 7%, 7.2 actually, and this will hopefully help soak up the excess supply that is currently in the region. Thailand is among the slowest growth in terms of economy. We take on NSDC projection of 3 to 3.5%. This is just a repeat of what I have shown to you before, the ongoing projects that is going around the region that is also helping absorb the excess demand that is specifically in the cement sector. Now, the last one for that to mention is the manufacturing. How is the manufacturing situation? Because in 2024, I showed to you that all the 3 major regions in the world were below the 50-point dash line. Now, confirm that the US economy is back into the expansion mode, whereas China is still kind of flirting above the 50 line, whereas the Eurozone is still on a contraction mode, but the slope has turned positive. So we hope that this is going to continue, and you should see this being reflected by the improvement in petrochemical prices, hopefully also improvement in spread. This is just the excess capacity on the polymer side. And for your reference only, when people talk about excess supply, the site is number 192 million tons. That's very, very large. But when you actually look at the distribution, the bigger capacity is coming in ethylene and propylene. But you've got to remember that it's only one plant to produce ethylene and propylene. These 2 products, they come together, especially when you crack a naphtha, in the naphtha to olefin chain. So anyway, the number is so big, but behind this number is probably just 5 to 7 producers. What does it mean? It means that if the spread looks very unattractive, there is a high chance that these capacities will be delayed. In any case, whether you look at McKinsey or ICIS, they say that the petrochemical utilization rate will remain depressed and it's probably going to be under 70% for the coming 2 years. Now, I just would like to note that even though the situation is depressed, for TPI POLENE, our utilization rate was 83%, and our program is we will hit 100% by 2026. We can do this because we are small and we also have a high degree of HVA development. Yeah, so this is just what we plan to do with our specialty. We were down to 83% utilization rate, and then we hope to bring it up to 100%. And this here, you can see that we switched to LDPE. Before, we used to say that we want to keep LDPE below 10, but last year was a different market condition, and we immediately switched to LDPE, whereby the margin is slightly better than EVA. And this is the price behavior. You can see that LDPE is doing better than PE, and the spread is also stable for EVA. Now, let us move to guidance. In terms of sales, we are looking for 8 to 10% growth. In terms of segment EBITDA, I just feature here three. We are hoping for 50 to 60% growth in construction materials. For specialty polymer, we hope it will be flat because we will continue going to the LDPE, both in India and other markets, and not China, and domestic. Domestic, we gain advantage because we do not have to spend money for logistics. Energy and utilities, we expect it to be down by 10 to 12%. Now, I see the analyst forecast on the earnings for power, and they are seeing big drop in earnings for power. The reason for that is the third adder will expire in April. And that is the other that is 90 megawatt, and that is a significant part of us. But our drop is much less because of cost savings and a lot of projects, which I will give to compressor to discuss to you about. Before we go to that, let us just show you our capex plan. Our last capex is 5.4 this year, and after that it will drop significantly. So we go off ramp on the capex, and we expect the ROC on this to be about over 20%, and this will come in as a help in ensuring that we will hit our EBITDA margin target of about 3 to 6%. And this is our guidance for our leverage. Yes, at around 8 times, it's concerning, but we have very clear plan to bring it down to below 6 times within the next 2 to 3 years, thanks to lower capex and thanks to cost savings. So I will pass you on to compressor to discuss about the cost savings.
Okay. ในส่วนของตัวรถหน้านี้เนี่ยนะฮะในส่วนของคอนแมทหรือธุรกิจปูนซีเมนต์นะครับแล้วก็ไฟเบอร์ซีเมนต์และธุรกิจที่เกี่ยวข้องกับวัสดุก่อสร้างเนี่ยในส่วนของ EBITDA เนี่ยจะเติบโตจากส่วนที่เราลงทุนนะครับส่วนที่โปรเจกต์จริงๆโปรเจกต์เนี่ยลงทุนในเรื่องของโปรเจกต์ของ cost saving เนี่ยโปรเจกต์ทั้งหมดที่ลงทุนเนี่ย 8,000 กว่าล้านนะครับแล้วก็เราจ่ายไปแล้ว 7,000 ล้านนะครับส่วนใหญ่ที่เหลือเนี่ยประมาณ 1,000 ล้านเนี่ยจะจ่ายในปีนี้ซึ่งเป็นปีสุดท้ายของการลงทุนของโปรลีน Can you move back นะฮะเราคาดว่าโปรเจกต์ที่เราลงทุนเนี่ยนะครับจะก่อให้เกิดการเซฟวิ่งเนี่ยประมาณเพิ่มขึ้นนะครับประมาณในปี 2025 เนี่ยประมาณ 1,000 ล้านนะครับซึ่งก็เป็นสาเหตุหลักของการเติบโตของธุรกิจคอนแลนนะครับในส่วนของเม็ดพลาสติกนะฮะก็คุณมาเรียก็พูดไปแล้วว่ามันมี excess supply เยอะขณะที่ดีมานด์ก็ตกไปจากเศรษฐกิจที่ไม่ดีของจีนนะฮะในส่วนของเซกเตอร์ของไฟฟ้านะครับไฟฟ้าเนี่ยอย่างที่คุณมาเรียพูดไปในปี 2025 เนี่ยสัญญาของโรงไฟฟ้า 90 เมกะวัตต์นะครับประกอบด้วย TG 4 กับ 6 เนี่ยตัวแอดเดอร์เนี่ยจะหมดอายุลงเพราะฉะนั้นเนี่ยในปีนี้เนี่ยมันจะหมดอายุลงไปประมาณ10 เดือนนะครับก็จะทำให้ EBITDA เนี่ยหายไปประมาณสัก 2,000 ล้านนะครับแต่อย่างไรก็ตามเนี่ยทางฝั่ง Power เองก็มีเงินลงทุนนะครับเงินลงทุนของ Power นี่ที่มีโปรเจกต์ลงทุนเนี่ยเรื่อง cost saving เนี่ยประมาณ 13,000 ล้านนะครับใน 13,000 ล้านเนี่ยจริงๆบริษัทจ่ายไปแล้วประมาณ 8,000 กว่าล้านนะครับก็เหลือที่จะลงในปีนี้ประมาณ 4,000 ล้านนะครับของ Power ซึ่งจะก่อให้เกิด cost saving เนี่ยประมาณ 1,200 กว่าล้านนะ1,200 กว่าล้านที่จะมี cost saving จากฝั่ง Power ที่ลงทุนไปเนี่ยนะครับก็จะทำให้ตัว asset ที่หายไป 2,000 เนี่ยลดไป 700 กว่าล้านเนี่ยก็จะมีติดลบเล็กน้อยนะครับประกอบกับ Power ก็คาดว่าจะมีปริมาณขายไฟที่เพิ่มขึ้นด้วยก็ตามประมาณการแล้วก็EBITDA ปีนี้ก็ฝั่ง Power ก็จะลดไปประมาณ 10% อย่างไรก็ตามนะครับฝั่งของ Power เนี่ยที่ลบ 10% เนี่ยก็จะเพิ่มขึ้นจากโรงไฟฟ้าใหม่ที่บริษัทได้ก่อสร้างเพิ่มเช่นนะครับโรงไฟฟ้าพลังงานเชื้อเพลิงขยะทางฝั่งสงขลาหรือว่ามุกดาหารนะครับซึ่งจะfully operate ในปี 2026 และ 27 แล้วก็โรงไฟฟ้าทางโซล่า power plant ของบริษัทก็ซึ่งจะได้ operate เพิ่มเติมในปีนี้นะครับแล้วก็ทยอย operate เพิ่มในปีหน้าด้วยเราคาดว่าในปีประมาณการ 2026-27 เนี่ยปี 2026 เนี่ย EBITDA ของ Power เนี่ยก็จะแทบจะไม่ลงแล้วจากปี 24 แล้วก็ในปี 2027 ก็จะเติบโตขึ้นในระดับ 5,000 ล้านต่อไปนะครับอันนี้ภาพรวมของกลุ่มนะครับในส่วนของภาพรวมทั้งปีเนี่ยเราคิดว่า EBITDA ของกลุ่มเนี่ยยังเติบโตจะลดลงจาก EBITDA ของฝั่ง Power ที่ลดลงในปี 2025 ซึ่ง offset กับ cost saving ประมาณ 700 กว่าล้านนะครับแล้วก็จะมี cost saving ฝั่งโพลีน 1,000 กว่าล้านเพราะฉะนั้นในปี 2025 เองเนี่ยภาพรวมเนี่ยก็ยังมีการเติบโตของ EBITDA เพิ่มขึ้นไปนะครับ 12-16% อันนี้คร่าวๆครับ Come back to you
I think okay. So yes, also the drop in the earnings of the power, Tpipl power, based on the market or analyst estimate is on the high side because probably they have not captured the cost savings that compressor has mentioned. And please note that these cost savings are technically dependent. So this is not it's not a revenue dependent kind of savings. So we can deliver this, and the only risk for us is execution. But we are already towards the completion of the whole program, and we think that the execution risk is quite low. Therefore, we stand a good chance in being able to deliver the estimated cost savings. So just very quickly, we wrap up with ESG and sustainability, but we will discuss more on this in the next quarter after the audited version of our sustainability report is concluded. So once again, we aim to be carbon neutral by 2043 ahead of the country target of 2050 or 2060. About that date. And for power, we aim to be carbon neutral 2037. As of the third quarter of last year, we had 2 million carbon credit equivalent that is already certified by Tpipl and so ready for monetization if the market opens. And we also have something like nearly 4 million credit that is already passed through the assessment of IGAT. Now, this asset has been with us for quite some time. And actually, we use a lot of money to invest into our plant and operations so that we can become less carbon, we have less carbon emission. But it is not captured in our returns at all. But hopefully, the monetization potential looks promising because in January, Indonesia Stock Exchange launched the IDX Carbon. And based on the last price prediction, the selling price there is about $23 per ton. And shortly after IDX Carbon, Indonesia Exchange announced the IDX Carbon, Stock Exchange also announced that we'll have a set carbon by following Indonesia within this year. So these two developments, regional, close to us, will probably help us monetize this carbon credit that we already have on our book. In terms of ESG rating by SET, we improved in Tpipl Power. We are now AAA rated, it's the highest rating for ESG on the stock exchange. But on Tpipl, we maintain our AA rating. And in terms of corporate governance, both Tpipl and Tpipl Power have 5-star rating. We are also in the ESG 100 index of Tpipl, and this is investable. You can look it up, and it has quite an okay performance. That is one area that you can get us along with others that are ESG compliant. And these are just certifications and merits for the corporate. One thing that I would like to highlight, remember, innovative product. Last year, our specialty film for packaging received IS 13601 standard in India. We are quite happy for this. This is a standard on the safety of the use of the plastic in packaging for contact with foodstuffs, drinking water, and pharmaceutical. This is the film that is between 50% to 50% VA. And we are just one of the 5 countries certified in India. And being a very big economy, we are hopeful that this certification will allow us a deeper entry into the Indian market. Yeah, so I think I will close our presentation here, and thank you so much for your time and your listening to our presentation.
ครับนิดเดียวนะฮะผมประดิษฐ์ในเวลาไม่เนื่องแต่อยากจะพูดเพิ่มเติมครับว่าบริษัทเนี้ยก็เรายังมองเรื่องการเติบโตอย่างยั่งยืนจากการลงทุนสีเขียวนะครับซึ่งผมได้กล่าวไปแล้วเช่นการลงทุนการปรับปรุงเครื่องจักรปูนซีเมนต์เพื่อลดการใช้ถ่านหินที่คุณมาเรียนพูดไปนำหินคลุกนะครับซึ่งเป็น by product มาใช้ใหม่สำหรับโรงเรียนเนี่ยเปลี่ยนเชื้อเพลิงเป็นเชื้อเพลิงไฟฟ้าทั้งหมดนะครับเชื้อเพลิงจากในฝั่ง power เองก็มีการปรับเปลี่ยน boiler จากเพื่อเป็นโรงไฟฟ้าที่ใช้ถ่านหินทั้ง 100%เรื่องโรงไฟฟ้าที่ผลิตไฟฟ้าจากพลังงานแสงอาทิตย์แล้วก็โรงไฟฟ้าขยะที่ประมูลได้เพิ่มเติมครับต่างๆเหล่านี้เนี่ยจะเป็นการลงทุนเพื่อก่อให้เกิดการเติบโตที่ยั่งยืนของธุรกิจของ TPI โพลีนต่อไปนะครับวันนี้เวลาหมดแล้วนะครับต้องขอบคุณผู้ลงทุนที่ให้ความสนใจนะครับการนำเสนอข้อมูลของบริษัท TPI โพลีนจำกัดมหาชนนะครับผมและคุณมาเรียต้องขอบคุณครับสวัสดีครับ